Hello, everyone, and welcome to our annual International Rating webinar. Thank you for joining us today, the 10th of October, 2024. Indeed, I am excited and delighted to be your anchor today. We are broadcasting live from Lagos, Nigeria's commercial nerve center. We are delighted to welcome you. My name is Dr. Wen Swaga, the Group Head Consulting at DataPro and Director, Compliance Institute Nigeria. I am also a development economist, chartered accountant, risk manager, compliance professional, and chartered banker. Our annual International Rating webinar started in October 2021 by DataPro, Nigeria's numero uno and technology-driven credit rating agency. The primary goal behind this yearly event is to enhance stakeholders' engagement and extend the all-important value proposition of stimulating the Nigerian economy. The 2024 edition is the fourth uninterrupted annual International Rating webinar series. This year's perspective is to assist in consolidating the traction and benefits realized by stakeholders from various editions. This year's program is themed Navigating Economic Uncertainties, the Role of Credit Rating Agencies. This edition provides an avenue to enhance the value proposition of credit rating institutions, particularly during the challenging and uncertain times akin to current realities and experience in Nigeria and some parts of the globe. DataPro, the technology-driven credit rating agency, has been building bridges in credit rating services, and these webinars, including this fourth edition, have already started yielding positive and desired fruits through cooperation, consultation, coordination, and collaboration within the African continent and beyond. DataPro has, through this initiative, created necessary enlightenment and sensitization amongst Nigerians, various stakeholders, on the significance of credit rating industry and the need to unlock opportunities leading therein in terms of liquidity, financing, and investments that are accessible to micro, small, and medium enterprises, the MSMEs, corporates, subnationals, parastatals, and sovereigns, as a major engine of economic growth and development, both in Nigeria and globally. Today's live international rating webinar is fully packed with local, regional, global, industry, and subject matter experts, opinion leaders, and seasoned professionals who will review and elucidate, extract, and even bring to the fore important areas in relation to the theme of this year's international rating webinar. Just like previous editions, we are confident it will be value-adding as it will provide and situate useful insights for stakeholders, especially in the light of navigating current economic uncertainties and the role of credit rating agencies. We will endeavor to adhere to the planned program within the scheduled time frame. We enjoin you to participate by making generous use of the chat and question and answer box for your questions and comments, as well as contributions. We look forward to receiving, collating, and addressing them later on in the program. We are optimistic that you will enjoy this program and it promises to be exciting. Once again, we are quite delighted to be with you today and do warmly welcome you.
Nigeria, we hail thee, our own. a symbol that truth and justice reign. In peace all battle honored, and this we count as gain. To hand unto our children a banner without stain. O God of all creation, grant this our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed.
And now, without further ado, let's get started as we proceed to connect to the source of life and living, our Maker. To take us through this solemn and hallowed process, I invite Pastor Olufemi Obaweya, Pastor, Redeemed Christian Church of God, RCCG, Promised Land. He is a finance professional, the project director and coordinator, One Alpha K9 Services Limited. Pastor Obaweya, please.
Thank you very much. Shall we pray? Father, we thank you for 29 years of this establishment. We acknowledge your hand over this noble enterprise. Thank you for seeing this institution through many seasons and phases. Father, accept our thanks in Jesus' name. And so, Lord, we want to commit this webinar into your hands and ask, O Lord, that you breathe over everything that will be done here for the furtherance of the economic prosperity of our nation. And so, Father, we declare this webinar formally open in the name of the Father, and the name of the Son, and the name of the Holy Spirit. Amen and amen.
Thank you so much, Pastor Obaweya, Pastor RCCG, for that opening prayer. Okay, now we proceed. According to Shakespeare, William Shakespeare, an English playwright and poet who said, "Some are born great, some achieve greatness, and some have greatness thrust upon them." The history of compliance and credit rating in Nigeria, Africa, and indeed the world will be incomplete without his name in bold prints. He has been dubbed the Grandmaster of Compliance and Credit Rating Trailblazer in Nigeria and Africa and across the world. Under his guidance, DataPro Limited has become a leading provider of compliance solutions and credit rating services. Mr. Abimbola Adeoye, a fellow of the Compliance Institute, Nigeria, and a certified compliance professional, is a visionary leader, sought-after commentator, speaker, and author on anti-money laundering, combating financing of terrorism, countering proliferation financing, MSCFT CPF, and proliferation of weapons of mass destruction, PWD compliance. His expertise is widely respected throughout the field of compliance and credit rating across Nigeria, Africa, and indeed the world. 29 years ago, he founded DataPro Limited, Nigeria's first leading compliance consulting and credit rating company. Initially, DataPro provided third-party services and enabled financial institutions globally to conduct required Know Your Customer KYC and enhanced due diligence (EDD) procedures on individuals and corporate customers located in Nigeria through its affiliation with Dun and Bradstreet. In 2002, when Nigeria was blacklisted by the Financial Action Task Force, FATF, and included in the non-cooperative countries and territories NCCT list. The need became necessary to engage the international financial institutions on the provision of relevant and domesticated anti-money laundering, combating the financing of terrorism, and countering proliferation financing, AML, CFT, CPF solutions. DataPro leveraged its experience in KYC and other due diligence processes and procedures to develop quality standard training and consulting for banks in Nigeria by rolling out the anti-money laundering and combating the financing of terrorism and the proliferation financing compliance training services in 2005. DataPro is regarded today as one of the leading and most experienced technology-driven credit rating agency, compliance solution provider, corporate governance, and fraud risk management consulting firm in Nigeria and Africa, and indeed consulted across the globe. DataPro is a trailblazer in many areas and contributor to a lot of sectors. DataPro's products and services include credit rating, compliance consulting and training, data protection compliance consulting, business information consultations. It also includes recovery services and forensic accounting, particularly recovery services, which most people call background checks, KYE, know your employee verification services, background checks, and third-party verification services, having developed the only politically exposed persons database in Nigeria. Today, it is not only provides training and consulting services for nearly all the banks in Nigeria and other West African countries. Abimbola Adeoye leads DataPro in its selfless drive and patriotic resolve in the fight against money laundering, terrorist financing, and proliferation financing in the country and beyond. Through his active participation in the industry, he, alongside other stakeholders, started the Compliance Institute, Nigeria, CIN. A member, board of directors of the Compliance Institute, Nigeria, CIN, Adeoye is championing easy access to global best practices, knowledge sharing, and information exchange amongst compliance practitioners in Nigeria. Abimbola has demonstrated uncommon passion, zeal, enthusiasm, and commitment to the propagation of the ideals of AML in Nigeria and across the globe. Without further ado, I introduce to you a true pioneer, a pace-setter, a great man who is constantly innovating and developing new ways to assist organizations and stakeholders stay ahead of the curve, not only in Nigeria, but across Africa and all over the world. I hereby introduce Mr. Abimbola Adeoye, the founder and managing director of DataPro Nigeria Limited.
Thank you, Dr. Wens. And I want to thank everyone that has taken time to attend this 2024 International Credit Webinar. This is the fourth in the series, as mentioned earlier, and we pledge that we continue to do this on the second Thursday of every October, every year. Okay, our purpose for the webinar is to propagate the value proposition of the credit rating institution, not only in Nigeria, but the rest of Africa. The theme for this year was carefully selected considering what is happening in Nigeria and other African countries. We are all passing through very challenging period. So we thought it fit that the team will be around navigating economic uncertainties, the role of credit rating agencies. Apart from the established role of providing opinion on quality of assets and capital, credit rating agencies also serve to complement risk management procedures. At DataPro, we strongly believe that the credit rating instrument should serve the common goal. It should be used to catalyze the economy. It will also serve to promote small and medium enterprises, corporates, subnationals, and other entities to create wealth and build a sustainable society for the good of all. To discuss the theme today, we have assembled a star-studded team. But before I go on, let me take this opportunity to thank our regulator, the Securities and Exchange Commission, for its continued support. We are grateful that the DG of SEC, Dr. Timi Agama, has sent a very powerful representative, the person, Mr. Bola Jomale, who is an Executive Commissioner, Operations in SEC, to deliver a good message at this event. Our keynote speaker at today's webinar is a man of many parts, an international figure, an inspirational entrepreneur who shares in our dream of opening doors of capital and finance to the generality of Africans in order to prosper and develop our continent. Christian Ruehmer will engage us today and share his varied experience as a credit risk professional, banking entrepreneur, who is deeply interested in Africa and over the years has continued to support and grow initiatives that will enhance development within the continent. Let me mention that in demonstration of Christian's commitment to the noble cause that he's been doing all over Africa, he has graciously donated his honorarium that he's supposed to earn from being the keynote speaker today to a worthy cause within the capital markets in Nigeria. We will work with stakeholders within the industry to identify the most appropriate beneficiary of this his noble gesture. Thank you so much, Christian, for this. We also want to thank our top panelists, including Sam Omukoko, who is the founder of Metropol, a sister rating agency in Kenya, for his practical demonstration of his belief in collaboration, cooperation, and coordination as a tool for information exchange and fulfilling the responsibility of the credit rating agency to their clients and communities all over Africa. I also want to thank Dr. Sonnie Ayere, the Group Managing Director of DLM, and Mrs. Kemi Awodein, the Managing Director of Chapel Deme, for taking time out. They were busy schedule today to share their thoughts and experience with all of us today. DataPro will be 30 years next year. After this period, we have operated in Nigeria as a SEC-registered credit rating agency for 20 years. We will continue to provide cutting-edge services to all our clients in order to ensure their economic sustainability. Let me conclude by inviting all of us to please listen attentively to our panelists and guest speakers and ask needed questions for us to benefit from this webinar. I thank you all for joining.
Indeed, William Shakespeare never made a mistake when he was credited with this statement that indicated that some are born great, some achieve greatness, and some have greatness thrust upon them, as we have seen one today, with wonderful traits and attributes in the person of Mr. Abimbola Adeoye. Thank you so much for the awesome and impactful welcome address, Mr. Abimbola Adeoye, founder and managing director of DataPro Limited, Nigeria's numero uno and technology-driven credit rating agency of great repute. Your footprints across many walks of life resonate in your doggedness, resilience, candor, contributions to humanity, and numerous achievements as a trailblazer. We thank you, the team at DataPro, and your partners in organizing this annual international webinar, the fourth in a row, for its value proposition and addition to stakeholders. According to the founder and CEO of DataPro, Mr. Abimbola Adeoye, credit rating agencies provide viable options for access to liquidity and capital, as well as risk management opinion on how to address economic uncertainties and challenges. In his welcome address, he also mentioned that DataPro will turn 30 years by the end of next year, and that out of his period of engagement within Nigeria, that DataPro has operated for 20 years as a SEC-registered credit rating agency of repute. You also gave assurance of your determination to continue to provide superlative and cutting-edge services to your teeming clientele across the globe in order to ensure their growth and development. Obviously, we understand it is not a mean feat to consistently and successfully organize a yearly international webinar of this magnitude. Hence, we sincerely appreciate your great efforts at sustaining this important annual program as a service, not only to the industry, but also to humanity. We look forward to subsequent editions. Once again, we want to thank you, Mr. Abimbola Adeoye, founder, managing director, and chief executive officer, DataPro Limited, for delivering this fantastic welcome address that touched on the germane and kernel matters with respect to the team and related areas for this year's international rating webinar. Okay, it is now time for us to move into the goodwill message. And we have the person of the DG of Securities and Exchange Commission, who is ably represented here today. SEC is an independent agency of the Federal Republic of Nigeria, set up with a primary purpose to enforce the law against market manipulation, protect investors, maintain fair, orderly, and efficient markets, as well as facilitate capital formation. One man, saddled with the Herculean task of this all-important, four-pronged mission, and doing a good job at it, is Dr. Omukoko Agama, Director General of the Securities and Exchange Commission, SEC. Dr. Omukoko John Agama has several years of experience at the Securities and Exchange Commission. Before his appointment, Dr. Agama served as MD at the Nigerian Capital Market Institute, NCMI, a subsidiary of the Securities and Exchange Commission, SEC. Dr. Agama brings a wealth of knowledge and experience, as well as expertise, to the SEC, having served in various capacities, including head of registration exchanges and market infrastructure, and head of public offerings, where he oversaw fundraising activities for numerous companies. He has also served the special assistant to Commissioner's Executive, to the Commission's Executive Commissioner, Operations for 8 years. During this time, Dr. Agama advised on issues relating to securities and investment services, fixed income securities, collective investment services, as well as financial standards and corporate governance. Today, Dr. Agama is unavoidably absent, but is ably represented by Mr. Bola, who is also an executive at the Securities and Exchange Commission. Therefore, to represent Dr. Emotimi Agama, we have a quintessential and astute professional with versatile experience and technical know-how in investments, securities, and financial advisory services. Executive Commissioner, Operations, in the person of Mr. Bola Ajomale. Mr. Ajomale is here with us to represent the DG SEC. Mr. Ajomale has over 20 years cognate experience in the finance industry, both locally and internationally. He has trained as an accountant in Ernst & Young and as a stockbroker in Citi Securities Limited, where he headed stockbroking operations. He expanded his research and financial advisory skills at Augusto & Co., where he was a senior business consultant. His international exposure includes various projects and investment advisory work at Manulife Financial and Canada Pension Plan Investment Board, both in Canada. Mr. Bola read economics at the University of Leeds, United Kingdom. He is a fellow and member of Council of the Chartered Institute of Stockbrokers, CIS, a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and a member of the Chartered Institute of the Securities and Investments, CISI, United Kingdom, where he is the inaugural National Advisory Council President. He sits in a non-executive capacity on the boards of directors of several non-public companies and is a trustee of the Association of the Securities and Exchange Commission of Nigeria. Mr. Bola Ajomale currently serves as the Executive Commissioner, Operations, Securities and Exchange Commission, SEC. I therefore invite Mr. Bola Ajomale, the Executive Commissioner, Operations, SEC, who is ably representing the Director General, DG SEC, Dr. Emomotimi Agama, to deliver the goodwill message.
Good afternoon, everyone. I hope you can hear me clearly. My apologies for, I am actually, we're on the World Investor Week with for Securities Commissions. So I'm actually in transit, but I did commit that I would like to be part of this program, and I'm very happy to be here. It's actually an honor to be able to join DataPro today as we start looking at the crucial aspects of navigating economic uncertainties, especially looking at the role of credit rating agents in a developing economy. As we continue as Nigeria along this slightly very, very certain that we're the path, it's very timely and very relevant that we should be looking to credit rate guide us along this path. So you do play a really big role in ensuring that there's transparency and accountability in the system, and making sure as well that even funds that are raised are deployed efficiently and used to their designed purpose. That role in fostering transparency and reducing information asymmetry is actually in line with the requirements and the expectations and hopes and aspirations of the SEC. And it also helps us build a more sound market and a more attractive market for both domestic and international investors. and it helps them make informed decisions. So it's critical that we have credit rating agents like yourselves, like DataPro, programs educating people as to what they're doing, and at the same time letting them know, giving them the information that they require to be able to make the best decisions. I had tried, and I guess I should still summarize what I believe credit rating agents do, and the very important role that they run, which is to facilitate access to capital by helping issuers in providing independent evaluations of their creditworthiness. Secondly, they enhance investor confidence by providing unbiased, and I would emphasize that idea of being an unbiased information, and well-researched information. Again, because credit rating agencies collate a whole lot of data, it means that they can actually compare one set of data with another and reach decisions that are devoid of, for want of repeating myself, any form of bias or any form of favor to one corporate over another. That independent measure is critical, and all over the world, including Nigeria, exchange commissions like ourselves, we rely on that information, especially if it has been particularly well put together, as DataPro does. It does encourage aspirations to top level of corporate governance, because by the time a rating agent finishes with a company, it normally would generate information that would point to what is right about the company, but also it would highlight what is weak about the company's governance. So it does actually help in the corporate governance of companies that subject themselves to rating. We're going into a strong infrastructure development phase right now. And as we go along in those infrastructure developments, we will see a lot of credit being issued. Not very many infrastructure projects are funded by equity. They tend to be by either project financing or by credit. And so at this point, it's a very important thing that we start white elephant projects that really do not have a fundamental, they don't have the fundamental strength and the fundamental liquidity that would be required in the future. For us at SEC, we need a robust and effective credit rating framework, and we have worked closely so that the regulatory environment, at the same time, we hold rating agents accountable to the highest standards for objectivity and independence. I think it is important that we are rating and local governments. Right now, local governments have been essentially empowered to start raising their own instruments. And we at SEC now consider the fact that standing a credit or revocable standing payment order alone might not be enough and might not be the only measure of credits are being issued. The more pressure it puts on the funds that are coming from the center to either the state or to the local government, which then puts that instrument or puts the investors in that instrument at risk. So I would encourage credit rating agents to consider other measures in addition to the enhancement received from an ISPO, and probably we should start with these irrevocable standing payment orders. That I think credit rating agents might want to look at is this tendency or increased momentum being gained by state governments who are issuing private bonds So the issue prior time, these don't have secondary market value. So they need to be tied to projects. So these are some of the issues that I think maybe credit agencies or individually, but it does require a certain kind of review. I would commend the organizers, DataPro, for bringing this together. I think it is very timely. I think it's going to be very useful. And I hope that the insights that we get today would help us in shaping policies and practices that would advance a stable and vibrant financial ecosystem. So I thank you very much, and I wish you a very productive and engaging conference. So thank you.
Thank Dr. Emomotimi Agama for the superb goodwill message, and who is today ably represented by Mr. Bola Ajomale, the Executive Commissioner, Operations, Securities and Exchange Commission. Just like you alluded in your goodwill message, credit rating agencies, CRAs, such as DataPro, play a pivotal role in ensuring transparency, accountability, and efficiency in the financial sector that is dominated by bank borrowing and plagued with financial exclusion. Indeed, credit rating agencies, CRAs, are very important in financial markets as they foster transparency, they reduce information asymmetry, and promote investor confidence. The CRA's assessment help both domestic and international investors to make informed decisions, which are particularly important in Nigeria, where there may be challenges in assessing reliable financial information. The CAs complement the efforts of the public and private sectors in ensuring that the government policies aimed at achieving socio-economic objectives are realized by the necessary bridges they build amongst the stakeholders through ethics and integrity and professionalism. We want to sincerely thank you, the Executive Commissioner, Operations, Mr. Bola Ajomale, who has ably represented the Director General of Securities and Exchange Commission. Thank you once again for that wonderful goodwill message. Now, we proceed to the keynote speaker. The keynote speaker is no other person than Mr. Christian Ruehmer. We have him with us here, and he is a seasoned investment analyst. He's a seasoned investment analyst, and he joins us from the US to make this presentation. And of course, a subject matter expert, with huge experience across multiple disciplines and jurisdictions. And he has participated in a lot of projects. He is internationally acclaimed and has been with most global institutions. Mr. Ruehmer is a distinguished expert in investment management, risk management, and impact finance with a rich experience spanning over 30 years. Mr. Ruehmer is also seen when it comes to capital market operations and investment. He has significant roles which he has played in multinational financial institutions like Deutsche Bank and West LB, where he served as Deputy Treasurer, Managing Director of a structured investment unit, and excelled in portfolio management, risk management, and workouts and restructuring, working in Frankfurt, Mexico City, and in New York. He has also held prominent positions such as Chief Investment Officer and Head of Risk Management for a fund manager in the impact investment sector. Mr. Ruehmer is the founding partner of Q-Lana. He has been at the forefront of integrating open banking and digitalization. Q-Lana is a platform that pioneers in embedding knowledge-based credit risk management and digital transformation into traditional banking systems and asset management practices. He has also established Q-Lana investment advisors in Kigali, Rwanda. I hereby invite Mr. Christian Ruehmer for his keynote address.
Yes, thank you very much for the introduction, and thank you. Congratulations to Mr. Abimbola for 29 years of working, of creating DataPro as a permanent institution. This is extremely successful, and congratulations to that. Thank you also, Abimbola, for the introduction and for the welcome note. This was also very, very interesting. My name is Christian Ruehmer. I thank you for the introduction, and it's a true honor of giving today's keynote speech. You've already heard a little bit about my background in the introduction, but I'd like to offer my journey, in Nigeria became advisory, and since then I had the privilege of working in the finance bank, one of the country's leading impact-driven microfinance institutions.
Progress.
Banking is far simpler than we often make it out to be. If we are honest, the fundamental product in banking is quite straightforward. It's a loan agreement, a promise to repay. And yet, we tend to celebrate when financing is provided. Personally, I think the real celebration should come when a loan is repaid successfully, not when it is dispersed. When it's repaid and the impact or the product that was financed is delivered. Our mission as bankers should be clear. Our role is not to shine. Our role is to support business in the real economy to grow. Working with companies and SMEs is not only the most important, but also the most fulfilling part. That these companies ensure success is also our own success. It is what makes us bankers proud. To do this, we must be well equipped. As bankers, we need to have strong financial skills, being able to understand the company's operations, read and interpret financial statements, understand the company, understand the owner, understand the business potential, have sector knowledge, and make accurate forecasts. We must be able as bankers to uncover the true strengths of our business beyond the marketing and PR language. In that sense, we share a common goal with rating agencies. Rating agencies embody the need for robust financial expertise and expand their product line, to scale their reach, to hire more people, to just grow and become the solid base of your economy. These businesses need financing, and it's essential that they find them within our local markets. To do this, banks and investors must become more comfortable with assessing these companies. And that's exactly where rating agencies come in. Ratings should help us evaluate the credit risk before the loan is approved, but they are equally important in monitoring how that risk evolves over time. I always tend to say no loan defaults before disbursement. So therefore, the rating during monitoring is even more important. As I mentioned earlier, approving and disbursing a loan is the easy part. Getting repaid is where the real work begins. That's where monitoring and ongoing rating plays a crucial role. I know many of you are actively working on improving lending processes. And there's no doubt that technology is transforming our industry. We gain deeper insights through data management, data science, and even artificial intelligence. I'm excited by these developments. However, it's essential to remember that technology should complement, not replace, our understanding and judgment. As the saying goes, it is not AI that will take away our jobs. It is those who know how to handle AI efficiently that are challenging us. We have a long road ahead to improve financing for companies, and by doing so, ensure that the growth of our domestic economy is going on. It won't be an easy journey, but with strong financial analysis and high quality ratings, we can certainly make significant progress. I look forward to listen to an exciting conference today. It is a great honor for me to be elected as the keynote speaker. I'm grateful for DataPro, its founders and its management, and all the participants to be at the conference, and I thank you for your attention.
Insightful delivery of this apt and wonderful keynote address. The role of credit rating agencies is so important that the society requires their services to grow and strengthen the economy and improve people's lives. Indeed, this is a thought-provoking speech and with many reference areas that will continue to elicit discussions, interest, and applications within the financial markets and amongst stakeholders. Mr. Christian Ruehmer, CEO and founding partner of Q-Lana, we want to thank you most sincerely for this splendid keynote address and hope you will continue to partner with us in this, our global journey on credit rating and the growth and development of the global economy. Okay, we now move on to panel discussion. The panelists and the moderators also include an array of institute professionals and subject matter experts with very deep knowledge, strong qualifications, and vast experience. We have Mr. Sam Omukoko, the Group Managing Director, Metropol Ratings, Kenya. We also have Dr. Sonnie Ayere, Group Managing Director, DLM Capital Group. We have Mrs. Kemi Awodein, MD, Chapel Hill, Denham. We also have Prince Oladele Adeoye, the DataPro Chief Rating Officer, who will be moderating this particular session. Prince Oladele Adeoye is the Chief Rating Officer of DataPro. He has over 20 years of experience in credit rating, and he is a subject matter expert also in compliance. Dele Adeoye, who also doubles as Executive Director of DataPro, has so much experience and has traveled far and wide in training. He has consulted for Intergovernmental Action Group Against Money Laundering in West Africa, GIABA, which is a FATF-style regional body called Financial Action Task Force, on their project of European Union-funded program on strengthening anti-money laundering in West Africa, SAMWA project. He is also a regular facilitator with West Africa Institute for Financial and Economic Management, WIFEM. This is in addition to several academies within the Nigerian financial institutions in which he facilitates programs. He is also a very grounded specialist in risk-based approach to AML CFT CPF and several others. He has also many years of multiple experience and holds so much qualifications, both academic and professional. I hereby invite Prince Oladele Adeoye to moderate the panel discussion.
Thank you, Doctor, and thank you for that introduction. And I'd like to warmly welcome the panelists right now. Yes, I know they've been introduced across the several segments of the program. So you will permit, as they say, to stand on existing protocol, and so that we can hit the ground running at this moment. I have with me here on the panel Dr. Sonnie Ayere is the Group Managing Director of DLM capital. If I don't have the word capital, I might enter into some trouble here. So, so permit me to add the word capital to the DLM Capital Group. And I also have with me on the panel Mr. Sam Omukoko, the MD of Metropol Rating. It's joining us from Kenya. You're welcome. And I also have my very big sister, Mrs. Kemi Awodein of Chapel Hill. We've met a couple of times, and it's also lovely to have you this afternoon. Without further ado, we already have a job thought out for us from the keynote address and from the goodwill message from SEC. We already have background information as to the theme of our discussion, that is navigating economic uncertainties and the role of credit rating agency. I would like us to have a first 2 minutes shot into the theme. And as they say, ladies first, I will be asking Mrs. Kemi Awodein to give us our 2 minute thoughts on the theme before we go ahead into other issues. Ms. Awodein, over to you.
Thank you. Good afternoon, everyone, and thank you to DataPro for having me here this afternoon. With regards to the theme and navigating economic uncertainties, I think many people would agree with me that we're living in interesting times in Nigeria, and only the brave and the bold, would set out on a journey where it concerns business, given the current economic realities. Having said that, I think one of the things that will always work for us is the fact that Nigerians are quite resilient, and regardless of economic policies, and regardless of all the vagaries in our economy, there are various factors that will enable us to navigate and to make the best of what could be a bad situation. I think, without going too much into the crux of the conversation, the government, it's how we implement and work around the various policies. It's navigating and understanding, what it is that we can achieve given what the policies are. So inflation is a reality. Our currency is a reality. Business dislocations within those economic vagaries are all true. And in terms of the specific topics of, how perhaps, ratings agencies and other such agencies can aid in navigating, it's in helping investors to understand what the lay of the land is. So regardless of how our economy is trending, we still have issuances, we still have people looking at Nigeria, and it's about us, trying to ensure that we give the best service and the best outlook without, of course, making promises that are thank you. Those would be my comments.
Thank you very much for that elaborate comments. Let me quickly mention here that you can be part of this panel discussion wherever you are listening to us from by putting in your questions or comments in the Q&A session using the Q&A icon. Let me come to Dr. Ayere. Yes, African have had several doses of the imbalances, and I think we've been in that in the last 2 years. Sometimes it began with the issue around Ghana, around defaulting. Then we have the big rating agency cutting down on ratings on some notable economy in Africa. And Nigeria is going through its own. How deep would you consider the African economic crisis, particularly Nigeria, where you operate?
Yeah.
You are muted.
Thank you. Yeah, absolutely. Thank you so much. And good afternoon to my fellow panelists, Kemi, Sam. Yeah, welcome. I think, look, the crisis today, it's not as bad as if you go and look at the crisis, African crisis back in the 80s, 90s. You know, this was when a lot of African countries did not have domestic capital markets. They generally borrowed, you know, in foreign currencies. And the crises were actually much deeper. I mean, if you remember, I think it was somewhere around 2001 or 2 when the current director of the World Trade Organization, Mrs. Q-Lana, was able to manage the debt forgiveness of Nigeria back then. And that's happened across a lot of African countries. And it's a typical cycle. What happens? Generally speaking, prices of commodities will drop, right? That then leads to currency depreciation because they're not earning enough. Currency depreciation basically then brings in imported inflation, right? Sometimes to combat imported inflation, you have what I personally call induced inflation. And what I mean by that is, you know, when you increase interest rates significantly, what that does is then increases the cost of everything. So apart from the fact that your currency has gone down, making the cost of imported goods more expensive, you then increase interest rates, making the cost of borrowing so expensive, which then effectively squeezes the economy, slows it down significantly, sometimes even leading to, you know, stagflation. So the reality is that I think for the way I would look at things is Africa is in a much better place than it was before. It's a shame about Ghana because I wish Ghana had developed its own domestic capital markets, debt capital markets, long-term bonds. The reality is most countries will be able to, let me use the word survive, on the basis that they're able to, one, put a system in place to mobilize domestic capital and put a transmission mechanism to ensure that that capital can be transmitted into the economy, thereby making sure that the country's ability to withstand shocks, especially external shocks, are a lot better. I mean, like my dear sister said, Kemi, we live in interesting times today in Nigeria. Can you imagine if Nigeria's debt, 100% of Nigeria's debt today was foreign? I just want you to just picture for a second if all our debt was actually in US dollars. How, I mean, we'll be talking about Argentina, if not worse. So again, it's about having those internal buffers, you know, to help you dissuade the shocks. Rating agencies, I think, yes, they have a role to play, and maybe I'll talk about that later. But I think if you look at what's happened in Africa, for instance, I don't think in the last 10 years, or even longer, that any African country has been. I don't believe so. All ratings have generally been down. Right? I mean, if I remember, the best rated country in sub-Saharan Africa is Botswana. And I believe, I remember at what time it was a single A rated country. I'm not sure where it is right now. I'll be surprised if it's still single A. Most likely maybe a triple B plus at best. And of course, that leads to very expensive money if you're borrowing internationally. And of course, you know, high debt service burden for a lot of African countries. So I'm hoping that what the African Union is putting together, which is to try and look at how we can have our own rating services, I think will be a very, very positive thing for the country and Africa as a whole. Thank you.
All right, thank you. And interestingly, Mr. Sam Omukoko, Was listening to you where you delve into the issue of rating, and that will lead me to my next question to him. Mr. Sam, to what extent does macroeconomic condition influence rating opinion? To what extent is that? Thank you.
Thank you very much, DataPro and the team, and thank you for the opportunity to participate in this webinar. From the outset, what I can say is that the purpose and fundamental challenge for a rating agency is to determine an entity's probability of default on a financial obligation. That requires that the rating agency develop a systematic methodology that has the right tools and that they ingests the right data to be able to come up with a PD value. Now, in every lending situation, you'll always see that there are three key questions that must be addressed. And that is one, is that will the entity pay back what it has borrowed at all? Because that borrowing involves commitments in terms of principal, and that principal is money that is intended to form the capital base of whatever project or undertaking that is being put out there. The second consideration will be is that will they pay me on time? Because payment on time normally addresses issues of liquidity, and it is actually a significant portion of the default characteristics of a borrower. Then, of course, every lending, particularly, is intended to generate revenues. It's an asset, and so we must be able to get a return on that particular asset. So if we're looking at these three factors and saying, what is the role of a rating agency if it is evaluating the borrowing capability of a government or a corporate? You are looking at a critical factor of the availability of cash flow. To repair debt, you need cash flows. And these cash flows will largely be generated from taxes if it's in the form of government. If it's a corporate, it will then be revenues. And these revenues will come from products that are being put up in the market, whether it's the domestic market or export market. And so the ability of the steady flow of cash flow, which result into free cash flow, becomes a fundamental criteria for determining whether the borrowing entity will perform or will not perform. So if you look at macroeconomic conditions like what is the interest rate prevailing, interest rates have a significant impact on the ability to service a debt. What are the, if there's a foreign exchange element involved, what are the exchange rates? Because exchange rates, if a country has a dollar-denominated rate and exchange rates worsen, obviously the loan repayments will usually go extremely high, and that becomes a problem for that particular country. We have seen that across African countries that are seeking dollar-denominated loans, but where exchange rates do rise, this repayment of these loans becomes a problem. So, and exchange rates basically will be looking at what are the components of foreign cash flow, DFIs that are coming into the country, and the export that the country is able to make to external markets. So we'll also be looking at things like the current account deficit, government financing, in terms of its day-to-day expenditure, development projects. If you have a widening current account deficit, obviously, again, that will become a challenge. It forces governments to start overtaxing its citizens. And we know that overtaxed citizens pose a significant problems in terms of decreasing purchasing power. unemployment becomes an issue, and therefore overall you'll find that the economy begins to shrink. So if these factors are not properly managed, are not properly choreographed into a proper management structure, of course, politics plays a significant role because policies are driven by the government of the day, which is a political institution. So all of these are factors that a rating agency will be looking at to determine and say, what is the weighting of this factor in determining the probability of default? And so those economic fundamentals are crucial to the outcome, to the overall rating that is assigned either to the government or to an entity operating in any economy. Thank you.
Thank you very much for those insights. And I'm able to pick one thing from what you said. You said every lending is to create revenue and generate return. And I will be riding on that particular statement to conducive for investments at this point in time based on that fact. Now, every lending is to generate revenue and return. As we speak, based on the crisis we are going through now, the uncertainties right now, are we conducive for investment? Thank you.
Okay, so I lost some of what you were asking, but if I heard the last bit, you were asking whether Nigeria was conducive for investment based on what Sam had said.
Yes, what he said is that every lending is to create revenue and generate return. Yes. So I'm riding on that to ask you the question, if the present economic climate is conducive for investments.
So I mean, we're not in an English class, right? But I'll start by looking at what we mean by conducive. Some people would say that perhaps conducive means is it a perfect environment for investment? I don't think there'll ever be any perfect environment for an investment. So I think at every turn in an economic cycle, there will always be a conducive environment. People are making money. Even as we speak, and not making, and the returns that they're making are not illegal returns. They have worked the system to their advantage and have looked for an opportunity where they can generate a return. So I think if we look at what Nigeria presents, first there's our population of 200 million people. 200 million people will need a service, and so in there somewhere will be an opportunity for an investment. We talk about our infrastructure deficit all the time in Nigeria. For people who have the wherewithal and the capacity to develop infrastructure, right there, is an investment opportunity for them. So I think when we look across all sectors in Nigeria, they're nascent sectors like the mining sector. Nigeria is quite rich in natural resources. So I think there are various sectors where investment conducive for me doesn't mean a perfect business environment, but for me conducive means where are the opportunities and where can we extract value, where can we extract returns. And speaking to the point about creating returns, I think if investors who look at any of the sectors where they want to play in Nigeria and they're issuing paper, I think for me the most active sector in Nigeria currently is the commercial paper sector. So for some people, there is still an opportunity for them to make returns, for them to issue paper, for them to take that risk within the disadvantages that play out along the line for me. And because there's the opportunity for the investor, obviously, to make a return, and for the business to take advantage of what's available to expand and explore their business. So I think that Nigeria is conducive. It's a difficult terrain, but there are opportunities, and because of the way the system has been formalized, people can make returns from those investments.
Nigeria is a difficult terrain, but there are opportunity. I think I could pick that from what you said. I think Dr. Ayere has challenged me here not to monopolize asking the questions. So I have a question from him in the chat area. And because that question was posted when Mr. Sam was speaking. So I will veto that to Mr. Sam to provide an answer. He's trying to say, what is the reason for African primarily seeking external loans, and how can we cope this? Why do we desire external loan? And you know, when we desire external loan, we subject ourselves to external condition as well, of which, of course, ratings and all of the areas in which you are seated is, you know, become desirable. So how can this be curbed? And why is it that we are seeking external loans? Would you want to take that?
Yes, let me take that. Clearly, lending is usually matched according to the risks that you face. So if you are generating revenues from external sales, exports that a country makes, it would make a lot of sense for you to borrow in foreign currency, because then your import proceeds can then be used to service the loan that you have, and you are unlikely to face foreign exchange risk. So that usually provides a very convenient borrowing mechanism. And because external borrowing is usually at lower interest rates, then you get the advantage of borrowing at lower interest rates compared to the domestic market. For example, in our Kenyan environment, we issued a Eurobond which attracted interest at 7% per annum. If you look at domestic borrowing now, government is going to the market to issue 5-year paper for 16% per annum. So if you look at that cost differential between what they are able to get externally and what they are getting internally, if they have sufficient export proceeds to service external loans becomes a much better option for the government to borrow other than going into the internal markets. The other reason why it is always good to go to the external market is because when a government is heavily borrowing from the domestic market, it is competing with private sector. And private sector needs the money to invest in development, manufacturing, agriculture. When that competition is high, it also pushes interest rates higher. So you find that then private sector begins to attract borrowings at very high rates. And that sort of now impacts on the cost of borrowing and ultimately the returns that these institutions can make. So externalizing government borrowing it always comes with some advantage, both to the locals and to the government itself if it is receiving export proceeds from whatever products that it exports. Thank you.
Thank you for that. Without taking anything away from what you have said aside the issue of pricing, let me also add that sometimes government pursue what we call quantitative easing. You want to allow some headroom for local borrower, and so you don't want to have a crowd out effect, or you want to give more room for local borrower to be able to access the market and develop. So you rather pursue what you call quantitative easing. I I don't think I want to believe that those responses answer Dr. Ayere's question before I pose another question to him. I hope that is fine.
Well, I mean, look, let me put it this way. I mean, I accept some of Sam's points, but I also don't accept them. I've always been an avid, let me say, I've always supported more of domestic markets than international. Yeah. And I say this because, first of all, I'll give you an example, Sam. You know, you're saying export proceeds, but then what happens is, instead of that very crucial FX coming back into your country, it's going back to some investor offshore. That gives you currency depreciation. That's number one. Number two is, you know, the reality is, you know, the way the world has been all been designed and structured, you have this, you know, like you borrow offshore, you get small interest rates, you borrow locally, you have high interest rates. The truth of the matter, yes, I agree. However, I'm more comfortable borrowing in my local currency. Why is that? Because I can always pay it back. Worst case scenario, I would print and pay it back. Yeah, you might have some inflation spike, but I can pay it back. In other words, the probability of default is significantly reduced. As opposed to me going to take a foreign loan against export proceeds where I don't even decide what the price of my export is. I mean, think about it, right? We countries, with oil, whatever, we don't decide the price, right? You can't say, this is how much I'm selling my oil, or this is how much I'm selling my cocoa, or how much I'm whatever. They can crash the price tomorrow morning. All of a sudden, your export proceeds can't service the debt anymore. That's happened to quite a few countries. Yeah. So to my mind, I've always believed, and it's one of the things, I mean, one of the first things I ever did for Nigeria was actually help Nigeria create its bond market back in 2004. And I think that has been one of the biggest safety nets that Nigeria's had, in the fact that a lot of its borrowing happens to be in its domestic currency, albeit at a high interest rate. You see, your ability to service it is a lot better than when you put yourself in the hands of the IMF or Paris Club and so on and so forth. You know, nothing wrong with that. I'm not saying it's not that it's fine for those, you know, who do it. No problem. But I still believe that, you know, getting very strong domestic capital markets, it's one of the cornerstones of any country's long-term development. And I'll leave it there. Thank you very much.
I need to react on that. There's a point that is very important. I must make it. Please allow me.
Okay. Please I'll allow you this one more time, then I ask another round of one question because of our time before we round up. But let me allow you to react to this. Go ahead.
Doctor, imagine a situation, you see, the situation with most of our African countries is that we are import dependent. Mm-hmm. So a lot of the things that we want to use locally, agriculture, fertilizer, machinery, we have to import these things. And if you have a high exposure in domestic borrowing and you have to buy these things and interest exchange rates work against you, find the amount of money you'll actually be spending to buy your foreign currency in order to buy the imports becomes a huge. And therefore, there's some sort of balancing when you say, okay, let me look at my level of export. Let me look at what we need. How much of that can I pay for before I operate in my local currency? Thank you.
Gotcha. Thank you, sir.
All right. I think the right word there is balancing. No country is actually an island.
Yep.
So one way or the other, we still need ourselves. And let me ask you, I'll just ask you one round of questions. Then I'll take questions from the audience before we actually call it a day. I know we are having interesting time, but let me ask Mrs. Awodein here. Do you think the rating agencies are performing their expected role during this period as a user of rating service?
Okay, so a bit of a loaded question, but I mean, first, what is the role of the ratings agencies? I think, as Sam has said, ratings agencies, are able to give an independent view of the ability to pay. I mean, that's for me the first fundamental feature of what the ratings agency does. That then gives comfort to investors that a third party has had a look at the financials and is able to situate both from an economic perspective as well as a business perspective, the outlook for that company, and helps the decision making as to whether or not an investor will look at that investment. I think to your question, are ratings agencies playing that role? I think that role is appreciated in an environment like Nigeria, where the economic factors that work against even the best run companies. I think some view, some leeway, some context has to be given to the impact on the financials of some companies. So I think it was Sam that mentioned devaluation in the currency, making foreign borrowings more expensive. When that hits a company that their top line is actually quite robust, what will the ratings agencies do? So short answer, yes, the ratings agencies, are performing their tasks, but I think, probably a more robust inflection on some of the issues that we face in Nigeria. But I would say that investors do rely on the work that the ratings agencies do, and so far there hasn't been anything negative arising from a reliance on rating reports. Thank you.
Thank you very much for that. Let me quickly go to Mr. Sam. Now, in assigning rating opinion or informing that rating opinion, rating agents would have to rely on a number of documents. At this period of uncertainty, is it appropriate for now to check information provided by the ratee?
Sorry, there was an interruption in the network, but if I try to rephrase what you're asking, is the quality of information that is coming from the ratee, is that adequate to support a rating process? Am I correct in rephrasing the question like that?
You are correct, except that I need to add that is there a need for a rating agency to now begin to fact check, to now begin to, wanting to know whether it is correct in terms of the quality?
So a rating agency will look information that comes to a rating agency for purposes of generating a rating is divided into quantitative and qualitative information. Quantitative will basically be statistics about economic performance, business performance, if there are balance sheets to look at. That usually is information that, if it's in the case of a company, audited accounts have been checked. If it's a case of government, Auditor General has looked at that. So quantitative information is information that one can rely on based on third-party verifications. The challenge we get is in qualitative information, which is subjective information about governance issues, about the management issues, about things that you cannot really put a tangible measure on, but you got to form an expert's opinion about the level of reliance and performance. And because of that, you will always find that ratings will differ. And sometimes rating agencies may appear as if they are biased in looking at certain things based on perspectives that they have. And one of the challenges actually we're seeing that is driving the African Union in setting up an African credit rating agency is the perceived biasness from the three big rating agencies. And so the question that is coming in, that what has been the impact of these ratings? The data that is obtained, an analyst flies in from New York to Nairobi or to Lagos, collects information, and goes back. How much of the terrain do they understand? How much of the monitoring will they be able to do to be able to say that the actual rating they have assigned reflects a true position of that rating? So those are the challenges that rating agencies will face, and therefore the promotion of locally based rating agencies is a noble idea, but it has to follow the generally accepted standards of what a rating agency does. Thank you.
Differently at this time. You are muted. Yes, Dr. Ayere, you can hear me. I just asked, what do you... Can you hear me now?
I can hear you, yes.
Yes, I just asked, what do you think a rating agency can do differently at this time?
Okay, to my mind, you know, rating agency work is actually, it's for investors, yeah? I always like the name, you know, Moody's Investor Service. And I remember when I was in my early days back in the 90s, when I was especially when I was on the buy side, I spend my time reading rating agency reports. And I think the one thing that agencies need to start doing now, it's not just about rating companies or governments, you know, it's also educating investors, you know. So educating, you know, I would say that most of the knowledge that I was able to garner over the years was because I was consistently reading things like criteria reports. You know, how do we approach this kind of a risk? How do you approach that kind of risk? Why is this more risky than the other? Okay, why does this transaction work this way? Right? Why does it work the other way? What are the nuances of these transactions? Okay, what are the actual embedded risks in these transactions? And how do you really truly mitigate these risks? You know, so I don't think the agencies are doing enough. Right? I in my previous life, you know, I did spend a lot of time with Moody's. Lots of relations with Fitch, even GCR with the Today, which used to be Duff and Phelps back then in the early 80s, and sorry, late 80s, early 90s, you know, and a lot of it was, you know, educating. So sending out reports that help investors to understand asset classes a lot better, you know, because it gets them more comfortable to invest. You see, so it's not just, you know, this company is rated A, this one is rated triple B, this is triple B minus, that's whatever. No. Question, for instance, now, how do we approach corporate credit risk? You know, what are the key things we look at? What are the things you investors should be looking at? You know, how should you, the investor, be actually approaching this kind of credit? So I think, to my mind, I think that's, for me, it should be the next thing that the three key rating agencies in Nigeria, including the ones in Kenya. I used to spend a lot of time in Kenya, you know, years ago when I was in my IFC days. Kenya was, in fact, to just tell you about how Kenya had affected Nigeria. I don't know if you don't know this. Kenya was one of the first to actually build a long-term yield curve around that sort of 2002, 2003. The governor of the Central Bank of Kenya was a very, 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 very intelligent guy. He actually built a yield curve, brought the rates down. I think bonds were down around 8-9% at the time. And, that was the same sort of methodology that we brought to Nigeria to also help develop the bond market here. I think the only mistake with Kenya then was that Kenya decided that the people that would trade it would be stockbrokers who really don't have enough capital to trade. Whilst here, we did it kind of different and allowed the banks, the treasurers and stuff to trade because they had the capital. And that helped to deepen the market, essentially in Nigeria vis-a-vis what happened in Kenya. But anyway, all the point I'm trying to make is that it's important that rating agencies do begin to understand that their key clients is not the company that's coming to rate themselves, but actually the investor that's going to be buying the asset. And helping that investor to understand that asset class better, right, improves and encourages investments. Thank you.
Thank you very much. The discussion is something I would have loved should continue, but unfortunately we are pressed for time. And for our viewers and participants outside the panel, I was able to pick a few questions at one point, but the others were unable to pick because the time allocated for this session is now up. But it was also deliberate on my part because most of what the panelists were saying actually addressed the questions in the Q&A. So to our audience in the Q&A session, my sincere apologies. And on this note, I want to thank our panelists for coming on board. The level of interaction, the level of knowledge displayed here today is highly unquantifiable. So it is on this note that I want to thank you immensely for being part of this. As we return back to the main studio for Dr. Wex to be able to take over from us. So Doctor, over to you. Thank you.
Thank you so much, Prince Oladele Adeoye, the ED and Chief Rating Officer, DataPro Limited. I also want to thank the panelists for the wonderful discussion and all the areas covered. At the point, I enjoyed the areas of discussion, particularly as it affects population. Mrs. Kemi Awodein was pointing to population, which is a critical issue in Africa, within Africa, Nigeria, and Kenya. The world, as of today, is over 8 billion population, out of which Africa accounts for about 1.5 billion of that population. Nigeria is over 200 million, and Kenya is about 56 million. What that shows is that there are lots of opportunities that can be unlocked in terms of infrastructural deficit and many other economic areas that are, of course, in need of financing, through which, of course, the capital markets and, of course, the role of credit rating agency can also be, explored and exploited. And in all these, I also enjoyed the discussion that Mr. Sam Omukoko also brought in terms of the foreign loans and domestic loans, in which he preferred, from the Kenya point of view, foreign loans because they are at very low interest rates. And of course, if repayments are going to be made from export proceeds, that it will be easier to be made, of course, eliminating the exchange risk. But Dr. Sonia Ayere slightly objected, bearing in mind that if you earn foreign exchange and fret it away repaying foreign loans, that what comes for domestic development. Therefore, it could be a distortion. But again, the moderator also brought in another angle where he called it quantitative easing and, of course, trying to bridge the crowding out effect. But in all, you brought a lot of, energy to this discussion, and you have really nailed it by unlocking the various, value propositions and additions that I believe all our listeners all over the world, the participants, have benefited from. It's on that note, I would like now to call on Prince Oladele Adeoye, because he's now wearing multiple caps, to please proceed with the vote of thanks.
Thank you, Doctor. On behalf of the management and staff of DataPro Limited, for the success of this international rating webinar. Firstly, let me appreciate our regulator, the Securities and Exchange Commission, SEC, particularly the Director General, Dr. Emotimi Agama. Again, SEC has proven that it is always ready to partner with any cause that is capable of deepening the capital market through this high-powered delegation in the person of Mr. Bola Ajomale, the Executive Commissioner Operations of the Securities and Exchange Commission. Sir, we thank you. Please convey our gratitude to the Director General that we are indeed very grateful. We are also appreciative of the significant insights provided on the theme of this edition of our webinar by the keynote speaker, Mr. Christian Ruehmer. Your time and efforts in putting these together is highly appreciated. Our gratitude also goes to the panelists, Dr. Sonnie Ayere of DLM Capital Group, Mr. Sam Omukoko of Metropol, and Mrs. Kemi Awodein of Chapel Hill, Denham. Your various contributions to the subject matter of the seminar has been invaluable. In conclusion, we appreciate the gentlemen of the press for the publicity, staff of DataPro Limited and Base One for technical support, and our audience for staying through to the end. Above all, we appreciate God for enabling us attain another milestone through this edition. The next edition shall be by the second Thursday of October 2025. Let's do this again. God bless you all. Thank you.
The ED Chief Rating Officer, DataPro Limited. There is no gainsaying that credit rating agencies play a very prominent role in unlocking opportunities in every economy. We have heard from experts, we have heard from institute professionals from all over the world who have joined this training, my webinar, to be able to bring to the fore those important areas, pointing to the fact that credit rating agencies bring about accountability, transparency, objectivity, and independence, particularly reducing information asymmetry. And by so doing, they complement the effort of the government in achieving very important objectives, such as social and economic goals. Therefore, as we gradually come to the end of this program, we will want to also let you know that we appreciate your presence and participation. Therefore, the theme for the 2024 International Rating Webinar, Navigating Economic Uncertainties, the role of credit rating agencies, could not have come at a better time, as it has provided lots of enlightenment and value addition to address the vulnerabilities, risks, challenges, and mitigations that assist in discovering new opportunities and unlocking the needed financial resources for the benefits of all stakeholders. DataPro Limited's 2024 International Rating Webinar has provoked a lot of thoughts on the role and contributions of credit rating agencies all over the world and how to navigate the economic uncertainties and challenges confronting various stakeholders now and in the foreseeable future. Once again, on behalf of DataPro Limited, Nigeria's numero uno and technology-driven credit rating agency of great repute, we thank you all for being part of this great and successful 2024 International Rating Webinar titled Navigating Economic Uncertainties, the role of credit rating agencies. For more, please visit DataPro's website. Follow us on all our social media platforms and contacts on display within this webinar. We do hope you will join us in our numerous engagements and again next year, 2025, for yet another great moment when DataPro will host a similar annual program as part of its corporate social responsibility and advocacy. We extend our best wishes to you all. As we bring this program to an end and look forward to subsequent editions, we want to most sincerely thank you so much for your active participation and also for now, say goodbye to you all. Once again, thank you. Now, as we draw to the end, we would like to close with a prayer, since we started with also a prayer. And to lead us through the closing prayer is no other person than Mr. Kende Rashid. Mr. Kende Rashid is the Business Development Manager at DataPro. As a matter of fact, we call him an ubiquitous and utility officer. He is almost everywhere, all the time, doing multiple things at the same time. Therefore, I call on Mr. Rashid to take us through the closing prayer.
Okay, thank you, Doctor. We want to sincerely appreciate everybody for joining in and for your contribution, and we pray that Almighty Allah come through for us all. Let's pray. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen. Ar-Rahmanir-Rahim. Maliki yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta 'alaihim ghayril maghdubi 'alaihim waladdallin. Thank you, everyone, and enjoy the rest of your afternoon.
Prayer. So once again, we say thank you and bye-bye, everybody. Thanks.
Recording